A lot of credit market vibrations in the last couple of weeks, but all things considered, 10-year note yield still within 20 basis points of at basically an 8-year high yield. Can you explain that dynamic?
Rick, we've seen a lot of back and forth. It's being led by the credit space, which is being led by the equity space. You know, you have a lot of turmoil out there. First, you had oil, which affected CLOs. We saw it in CNBC. Then you had the GE situation. So you've had a lot of back and forth. You know, we would have thought that 10 years would have gapped through 3%. But you know what? We got a lot of supply coming out, and we have a lot of deficits. And it doesn't look to me like either one of those are going to be addressed. So, you know, the market's kind of been in a range. We really didn't break 305 yesterday, and we're kind of in a 305, 325 range for 10 years. Like, that looks to me like
what I
find
find interesting, Andy, is that we've had historic short presence in the Treasury space. And now we have news over the last week or so that it's starting to unwind. With that buying pressure, in addition to the credit spreads and the HYG and the LQD ETFs and the equity volatility, one would have thought that channel of buying pushing yields down would be so much more aggressive.
Rick, you know, we've seen a steepening of the curve. You know, the Fed is starting to blink. You saw it last week with Powell, and then backed up by Clarida, and then backed up by Harker.
Do you think that's a bad thing, Andy? Do you think blinking's a bad thing?
Not at all, Rick. They need to blink. They are looking too far as to where we've been and not looking as to where we're going. And you can't drive looking in the rearview mirror.
This is really important. Let me stop you there. So in the context of what they've done thus far since December of 15 and ending with 3 rate hikes in 18, maybe a 4th coming, have they gone too far as of this point right now?
Yes, they have, Rick, but that's not going to stop them from raising on December 19th. We got one more, and then I think they pause. I think it's going to be a dovish rate rise on December 19th, and they don't go in March, and they may not go at all in 2019.
You know, Andy, the spread between tens and boons this year alone has blown out 70 basis points, which means at 270, that's about a 35% move this year, year to date. What is the downside? How is that metastasizing? In other words, is it unanswered completely? What has capital done to penalize the Europeans and to some extent the Japanese for dragging their feet?
Well, the first thing you see is, I mean, there isn't a European bank that has capital worth talking about right now. I mean, every one of them, they just can't make money in a negative interest rate environment. But, you know,
so there is a downside to not raising rates. And see, that's my point. And I understand we're on opposite sides of this, but there are issues.